Greetings, this is Jeff Scott, and I'm a little bit late, but I'm still the 19th, and this is my top-down review. I'm running late today because I had the opportunity this weekend to go to a joint San Francisco IBD Meetup group meeting. About 60 people showed up live, another 100 on Zoom. It was a great meeting led by folks like Michael Scott, Lee Tanner, Steve Sweats, Greg Morton from South Carolina. Actually learned quite a bit and really glad that I came. The meeting just got over. It's about 5 o'clock Pacific time, and I've got a couple hours before my red eye, so I thought I'd try and put something together. Obviously things are challenging out there right now, and there's no question that this is bearish seasonality. How many times did I hear on CNBC that a couple of weeks starting at September 17th is the worst time of the year? But I asked the question, is sentiment too bearish? It's a question. Today is the 19th. My name is Jeffrey Scott. My email address is hgsidoc@gmail.com. If you're watching this on YouTube, I do not keep a mailing list. Hit subscribe. And if your alerts are on, you'll get notified when I post these. I usually do it earlier on Sunday or late Saturday night. If you are watching it on YouTube, there will be a gear in the lower right-hand corner of your video. You want to make sure you click on it and make sure you're getting a 4K or your highest resolution available. I recorded in 4K. There'll be a link below with a 4K download if the quality of the video on YouTube is poor. Keep in mind the initial YouTube quality is always poor. They post it in standard deviation, which is not very good. This is for educational purposes only. Anything I recommend is in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I've paid for the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I've probably got some new people joining today. A couple of people asked me about it at the meeting. I call my style be your own guru, and by that I mean go out, learn from the very best, and create a trading style that fits you. And it doesn't have to be one style. I certainly started with CANSLIM. There's a CANSLIM underpinning to what I do. But I'll also be the first to point out that there are a number of other styles that I've incorporated, many of which are listed here. I own a lot of software, and I just wanted to call out wealth charts again. So let me just add this. Most of the time, not most of the time, 100% of the time, if you see me at home and it's during the day, you'll see TradeStation and Thinkorswim up. Of late, I've started playing around with a really amazing program. It's called Wealth Charts. And it's amazing, it's a very modern feeling program. It's got a lot of built-in power. Data is free. They like Metastock. You can buy add-ons for it. But it comes with a pretty nice package of material and education. You only want to buy it, in my opinion, is during their Wealth 365 events, because why pay $297 a month when you can get it for $999 a year? And that's coming up, I think, in 2 weeks. Just Google Wealth 365 event. I use HGSI and EdgeRater for my analytics. And then if you were to look at TradeStation or Thinkorswim, you'll see Dr. K's tools. You'll see Sager's Q tools. I'm never paid by any vendor when you buy something that I suggest or use. And I'm just an unpaid volunteer, and this is just education. The program HGSI comes from www.highgrowthstock.com. Again, I'm not affiliated. They give you a free 30-day trial without even using a credit card. And if you do that and you want some advice, email me at hgsidoc@gmail.com. I'll share with you some videos that I created of how I use the program. And under investing strategies, you'll see my thoughts on a weekly basis. And again, much of what I do will be using HGSI. Now, I think it's pretty safe to say that we have probably come down on this right shoulder, meaning we are starting to build some momentum in stage 4 fear. Now, the question is Are we really entering a big correction? Will we go down another 10 or 12% and hit the 200-day simple moving averages? Or, as I show you, will we retake the 50-day moving averages? Will we retake the regression channel lines and bounce? Because this is also an obvious bounce play. So I think there is some risk both ways. It's not just that this market is going down. That's important because it's going to really control what you do. Now, in each box, this is what you do when you're in a big uptrending market, what you do in a downtrending market, what you do in the setting of uncertainty. I've raised cash. I've got less positions. I have sold premium on some of my things that I'm holding, and I'm using that premium to buy protective puts. And then I've got some contra ETFs on my position for as a hedge, not because I think the market's going to drop, but I think it may drop, and I want to reduce or eliminate my risk. So that's where I think the market is. I think I guess if it was up to me, I would think we're going to bounce a little bit here and maybe one more leg up before we roll over, but no one really knows. And as Amy Smith from IBD said about a half hour ago as I was walking out of the meeting to come up here and do this, when you start to see the big cap 20s, the IBD 50s, and sector leaders, big, your canaries in the coal mine, when you start to see them rolling over, you'll know the market's done going up. I don't think that, as they say, that the fat lady is necessary son, and that these things have not necessarily rolled over. So maybe we're not done. I think caution at the minimum. You want to see ugly markets, just look at the sea of red on Friday sector reviews. Those that are new, starting here, you'll have the S&P sectors with their components. I got a little liberal on the components of the real estate. And you'll notice that I don't really see anything that looks good here. About the only thing that's got any resemblance of green is discretionary and healthcare. And when you look at things like materials are all red except for one, financials are mostly red, industrials are mostly red, staples predominantly red, technology was hurt, utilities. So if this is defensive, utilities are not acting that way. So clearly Friday was a weak way to end the market. I was wondering if we were going to see the bounce for Yom Kippur, and the eve of Yom Kippur was Wednesday. In Judaism, the holidays start at night, not at the next day. And there was some rally in the market on the eve of Yom Kippur, but we sold off into the rest of the week. Let's go into Thinkorswim and take a look at some of my market thoughts. So let's open this up. Maximize sell. Again, I'm on the road, so I don't have a fancy mic. I'm just using what's built in. So if you look at this, and I remember when we were talking here and I said the market's going to bounce. Well, you got 1, 2, 3, 4, 5. It's more complex. 6, 7, 8 times since the market started moving up here in late last year. This is the S&P futures. We've pulled back here to the 50, and I'm sure there's more if we keep going left, and we bounced. Now, I could say that we broke through the 50 here, and that's bad. We broke through here, we broke through here, we broke through here and here, we broke through here, we broke through here, we broke through here. So none of that really matters. So the question becomes, are we failing here? And are we going to come down to visit the 200 in red, which would be a pretty big pullback? And you could see OBV has rolled over with the market. Or is this going to be like every one of those other times we're going to bounce? I think no one knows. And the futures really are not giving us much of a signal at this point. I think a bounce is certainly possible. I don't necessarily know what's going to happen. And as I said, I've got lots of hedges. But I think it will be a mistake here to be overly bearish. Cautious, yes. Go short your whole portfolio? I don't think so. Nasdaq. Well, the Nasdaq futures haven't even pulled back to their 50. And again, some complex pullbacks, but the 50 has been a place where the market has bounced. 17 is broken. So we still haven't broken down. For fairness, last high on the S&P 500 futures was September 3rd. It's still technically in a sell signal. The Nasdaq is technically in a sell signal. 910 was the last PPS signal, which was a sell signal. If we look at the Dow futures, make sure, have broken down more, but are they starting to go sideways? I don't know, but this is what we hope we don't see on the Nasdaq and S&P. So the Dow futures are hurt more. If I look at the Russell futures, these are not broken. This is kind of boring Darvis box-like, but it's sitting here on the 50 in between the 17 and 200, has not broken down below that 200, and is really, as we talked for weeks, in a trading range. If I look at the VIX spiked up above the 200 and held. Now, it's given up a little bit, I guess, after hours. I can't tell because it looks like it's given up some with the red bar there. But we will see what the VIX does. I actually have and they're cheap calls. You start with an out-of-the-money call on the VIX for almost nothing for VXX, and then it moves one day your favor. Now it's in the money, so I've got a lot of them. Right now they're not worth anything, but if the VIX spikes, I'll have some profits there. If it goes down, I didn't invest much. And to me, it's a hedge, not a big bearish play. And if we look at the dollar has broken up here. Now, a strong dollar is bad for my portfolio. It seems to do better on weak dollar days. Whether it's some of the industrial metals, whether it's the Russell seems to do better on a weak dollar. When you look at this, you might be tempted to think the dollar is getting stronger. But if I just flip this to a weekly chart, and I'm not going to go through it as individuals tonight, if I put on a weekly chart, you can see that the dollar may have come up its bottom, but it's far from its top. And you can see on the weekly, the VIX was strong, VIX futures, but it hasn't taken out even the 17-day or 17-week moving average. IWM remains in a trading range. The Dow is near a high, trading sideways. The Nasdaq is near its high, trading sideways. And the S&P, and you can see last week, traded down on most of these, is just off its highs. In fact, on the Dow and the S&P, the Nasdaq, I guess on Monday they hit all-time highs before the market started selling off. So, it's really hard to be bearish when you're seeing stocks at all-time highs and the one that had been the laggard is in a trading range near highs. It's right off the highs, weekly highs of the year back in April. All right, let me put this back to daily so I don't mess myself up when I'm not doing a video. Now, I also like to look at the expected move. And the expected move is, remember, this is the option maker is setting the price for an at-the-money 1 week straddle. The straddle is what you would pay if the stock, you buy a call, sell a put, and buy a put, and typically the cost of that is going to be the delta between the white line, which is where the market closed last week, and the green line. And if you pay 1 times that, and the red line and the green line are equidistant from the center line, as long as the price stays within the green and red line, the market maker is going to make money. And we know from what we did not that long ago, about 80% of the time, it finishes within the expected move. So here's the S&P 500. Visually, it looks like it's a little wider this week. It looks like the expected move is almost 100 points either way. And notice last week, it finished halfway down towards the red line, which means within the range. The market makers made money, and it was relatively flat, selling off some on Friday. If you look at the Nasdaq futures, again, selling off on Friday, staying within the range. Ditto the Dow futures. The Russell futures weren't so bad on Friday, sort of a doji, just down a little bit on Friday, and stayed within the range, as did the VIX. The only thing that went outside the range, nope, the dollar was within the range as well. So really last week, even though to some people I heard how bad the week was, as you'll see to come, wasn't such a bad week. And looking at the expected move charts, it was a relatively, I hate to use the word quiet, but a relatively quiet week. Now, a few weeks ago, I put linear regression channels on the major index ETFs. And, this is where if you want to be nervous, you might be nervous. The spiders have dropped out of there. Let me just make it longer. So this is a regression channel on the daily charts going back the better part of a year. And you could see we've done it before. When it pulls back, you expect a bounce. And interestingly, we're failing at the center line of the regression channel now. Well, we've pulled back and we didn't bounce. We broke under. So I would look for this to very quickly get back into the channel, or we might see some much significant selling to follow. You look at the Qs. Now the Qs have been bouncing. You can see the strength where the S&P is from the lower to the middle, the lower to the middle. The Qs in their channel are from the top to the middle, the top to the middle. So much less bad looking than the S&Ps, and really sitting at the middle. Now the diamonds have also broken through the bottom of their line. And, if the S&P follows the diamonds, that's probably not great for the broader market. But remember, I don't talk about or necessarily trade the broader market. We talk about growth stocks, small cap growth stocks, which may not be reflective of what you see in the spiders or the diamonds. The IWM, this one looks totally different. I mean, the regression channels, these were actually computer generated, don't fit because it's going horizontal in a Darvas box. And, you can make a lot of money buying the bottom of the box and shorting the top. Right now it's in the middle. So I look at this and I think that spider and that diamond better get up very quickly, or I'm going to have to become more bearish in my thoughts. But when I look at the right-hand side of the chart, the Qs and the IWM, they look okay. And maybe that's why growth stocks and CANSLIM type growth stocks didn't feel so bad this week. All right, now let me go back to the PowerPoint. And on the weeklies, you can just see where we've come from. And you can see, at least on the E-minis, the Nasdaq, and the Dow futures, within the last week or two, were all-time highs on the weekly. The Russell, below all-time highs, but sideways. All right. Rates were mixed. On the left, the 10 years were up. On the right, the 30 years were flat. Rates matter. The white lines are sort of, to me, it's a magic point. When I'm above the white lines, the signal to the market is the market can be stronger. When we're below the white lines, the economy is strong. When we're below the white lines, I worry, the lower white lines, about the economy. When we get above the upper white line, and so it came off on the left-hand side, that's when the rates start to be bad for the markets. I think the problem that we had earlier this year with the rates going up was not their level, because their levels are still quite low. I mean, this is going back to 2009, and we're below any time in that period. But what you can see here is the ascent here was just ridiculous. AD lines lead down and drop along with price. So we don't see divergence on the small stocks or the large stocks. And you can see here that maybe the descent is slowing. You've got the Qs, the spiders, and the diamonds up here. You've got the IWM, which actually looks like it ticked higher on the week, which it did, transports continued to be weak. So I'm not a Dow theorist by any means. I don't think I got a couple of Dow stocks just because some of the growth stocks are in the Dow. But, with transports continuing to fall, it would seem that if you believed in Dow theory, this is not a market that you're expecting to turn around. And with rates kind of doing nothing, the bonds ticked up this week. If we look at breadth, short-term breadth actually improved. Stocks above the 40-day went up, while stocks below the 200 went down. But the T2121, the 3-month new high, new low, they ticked up. What does all this mean? This means there was an improvement. So again, we have this really negative commentary on CNBC and Kramer, et cetera, about how this market is going to fall. And it may fall. But then you start to see little green shoots like this chart that say maybe not so fast, and maybe it's stronger underneath than it looks. The daily McClellan, when I start to see the oscillator getting down to the minus 145 level, I look for a bounce. We failed at the zero line, which is a bearish signal by itself, but we're nowhere near the lows. You can see we've stopped here on the 50 on the daily. If I look at the weekly, again, there's no signals here. We're looking for extreme readings, we're looking for divergences, and we're looking for zero line rejects. Perhaps we saw that on the daily oscillator. Now, I have a lot of tools, and these are from Sager. And what you have here is, you can see we've got 6 sets of dots here. 1, 2, 3, 4, 5, 6. And if I remember correctly from Sager's presentation, it's a mathematical calculation of accumulation in green and distribution in red. And so the question I had was, how do today's current markets look like compared to some of the recent corrections? So if we look at white at the USA, a global, combination of the USA markets, they peaked in late February of 2020. We all know that. And then they had a massive sell-off. And it doesn't matter if I'm looking at the S&P, if I'm looking at the S&P 1500, the Nasdaq 100, or the Dow Jones Industrial. What we notice is at the time that we were selling off, down here we see a bunch of distribution dots. Each dot represents a day. If you look to the left of that, you saw some weakness here with 2 dots, but you don't see a big pattern of distribution unless you go back, 6 months. So this was something new, all right? And I think we all know what happened in February, March 2020. We had a massive sell-up. Now, just to show you what's on this sheet, yellow represents stocks above the 50-day moving average in this group. White, those above the 200, and orange, those that are, to me, the most attractive, which would be above the 50 above the 200. So you could see there clearly was weakness here, and you could see that it rolled over. Stocks 50 above the 200 actually rolled over later, as you might expect, the others. As you move to the left in the major indexes, you have advanced decliner, you have up-down volume, and you have new high, new lows. And clearly, as we were coming into this period of time, we started to see the new lows come in. If we look at the late 2018 correction, as we have here, again, as the market is getting ready to roll over, we see 1, 2, 3, 4, 5, 6 red dots. Another fall back in here, the red dots were there. So the recent corrections have shown distribution on the major indexes. They've also shown lots of new lows forming before the market rolls over. Well, look at today. We have 0 red dots, okay? We have the stocks 50 above the 200 has barely rolled over. Stocks above the 200-day moving average are down but heading up, as are stocks above the 50. And you can look at the various indexes. Also look down here at the new high, new lows, and you could see the same reason we're not seeing a Hindenburg-Omen fire is there's just not a lot of new lows. So it doesn't look at all like February 2020 or late 2018, but maybe the key word are those three letters, yet. Looking at other things in the market, Buck at 69% are below the midline, which means most of the stocks are trending probably between the lower Bollinger line and the midline, and 11% are below. Now, could we reverse here and go higher? Absolutely. Are we at an oversold area that we expect to bounce? Not yet. There was no Hindenburg Omen fired, and it's interesting is if you look at the Nasdaq, which we actually had a rise in the number of new lows, but we don't have enough new lows to trigger a signal. If we look at market tone, we had a number of kahunas to the downside show up on Friday, and you can see if you look at the Woody indicator that you now have red and yellow, so we've clearly become more bearish from a market tone. Now here's the head scratcher. If I take, this is using the fundamentals from last Saturday running to this Saturday, and if I look at the return versus ERG, and remember we throw out the head and the tail because there's almost no stocks there. It was probably a little bit trending against high ERG. If we look at return versus EPS rank, the ones with no earnings did better. If we look at return versus relative strength helped. Group was irrelevant. So you look over here, and Lee Tanner and his excellent presentation probably seemed less worried about the market. Mike Scott in his excellent presentation did something that Ian would have said, good stuff, and he looked at boxes and how things look different today compared to the prior rallies. So something is wrong with this rally, and that's kind of why this is all over the place. But here's the thing that's interesting. Let's look over here. The S&P 500, is way down here, was minus 1.16 on the week. Yet the IBD 50 was plus 1.97. The IBD Watch Live List was plus 1%. The Market Smith 250 was plus 0.25. The Mike Scott Focus 3 list was up 3%, 3.1%. And the RS Line Blue Dot was up 3.18. Those are all CANSLIM growth stock groups. They're all outperforming. In green, you have my portfolio, and I was happy to be up 0.82% on the week, especially when the big indexes were down so low. Now, my actual performance is probably a little bit different because I use options, but it was not a bad week, although the indexes looked ugly. So maybe something's happening. Are we rotating into small cap growth, or was that just a 1 week wonder? Don't know. We'll learn together. Sector strength, again, deteriorated like the market with lots of red here. And if we look at it in Q Edge, up here we got 1 day, 2 day, 5 day, 10 day, and a month. Over the month, it's been 50-50 on the sectors. But over the last 10 days, 9 out of 10 sectors were negative, perhaps improving a little bit on Friday, which was still 6 to 5 were negative. If we look at industry groups, 58% negative over the month. Over the last 10 days, 89%. And you could see 2/3 of the industry groups were negative on Friday. And if we look over the month on stocks, 57% are down. Over the last 10 days, 81% are down. And about 2/3 were down on Thursday and Friday. Now, one thing to be aware of, the Q tools are relying on the S&P 1500. So the actual numbers may be different than what you see on the spiders. If you look over here, you can see real time I get bucket updates, 69% below the midline. And the darker red is where we ended the week. The lighter red is the day before, and you could see how the number of stocks beneath the Bollinger Band here went up from 2.1 to 10.5%, while the stocks who are above the Bollinger Bands are very little. You can see over 5 days we had 6 winners and 5 losers. Over 10 days, only one sector was up, and over the month it was 5 out of 10. And I can't see this either, but I believe it was 5 out of 6 were down on the last day as well. If we go and look at the sectors, you can see healthcare actually outperformed, and we'll look deeper at that. But healthcare, financials, and communication services. What's lagging are material, energy, which is up and down, IT, which had been strong, has weakened. Now, I guess another thing that perhaps would be arguing against us having a significant correction here would be if this market was truly in trouble, would we not have expected maybe kind of to see that staples, REITs, and utilities were at the top? And staples is there, REITs is in the lower, and utilities. So maybe that's telling me that the market may not be as bad as I think. I'm not a perma bull, but if I've got many faults. I'm sure everybody listening to this has faults. I'm often too bullish, so it would not shock me if people think I'm being too bullish in this report. Well, if I take the first 3 sectors, and I want to look at what industry groups are there, here are the industry groups ranked by one-day strength. Now, it's interesting. There's 147 groups, so there's only 2 of the top 8 that are not captured in those 3 sectors. Healthcare tech, managed healthcare, alternative carriers, that's a technology, healthcare supplies, biotech, healthcare services. And I could tell you, as I did my top-down review, I was intrigued by the number of healthcare-related biotech and managed care, probably were the majority of them. Now, we can hit this button. I could highlight the top 6, 8, hit that button, and I can get a very big list of the stocks that are in those sectors. And then there's a scan with this crown that brings up a list here of those that are undervalued. And I looked at it, and what really stood out to me was AbbVie. And with the crown, I know that they're undervalued with great earnings per share growth. And I think they have revenue growth as well, looking at this chart. I then went to that was in the Q Edge. In the Q Vital, I put AbbVie in, and I got a list of all the other stocks. AbbVie is part of the biotech. And I learned some things. I can see price and volume here, which is great. But I can come down here. I can see its valuation, primary and second day, no risk of a short squeeze. I can see its earnings and its revenue are strong. It's got an overall buy rating. If you look at fund ownership, it's blue, which is positive, and you can see its revenue and its earnings. Now, the Q Edge tool is the S&P 1500. The Q Vital tool opens it up to a much larger universe. So if I click this, I would get a list of the stocks. And these are some stocks, including some that would not be in the S&P 1500. Some of the stocks in this area that intrigue me, one is CRISPR, a genetic editing biotech. And it went through, and we talked about today, stocks breaking through trendline resistance. And here's one that had a nice move, a new John Person buy signal, took out a descending treadmill. And the fact that it turned blue with a bottoming tail on the weekly on the left is also bullish. How about Innovia? Again, descending trend line, breakout above it, new John Person buy signal, big bottoming tail on the weekly. ZNP, this HZNP, Horizon Pharmaceuticals, one that I've talked about a lot. It's been going sideways. Is it ready to roll again? I think these two are probably higher short-term probability. Horizon's probably a little bit closer to its, you got some resistance overhead. But I think all three of these, which are considered undervalued by Q, look interesting. Canaries in the coal mine. Remember the thing I said about Amy Smith? If the market rolls over, you'd expect the leaders to roll over. And if we look at the Canaries, they certainly have not rolled over. They've gone sideways here, still above the 17, the 50, and the 200. They had bounced off the 17 early in the week. These still look like they want to go higher. That would be a check mark in the long side. Know your news and earnings this week. So if you look at Monday, housing, the good thing about waiting to Sunday to do this, I get the Econoday calendar, which is much better, I think, than the others. I mean, the first thing that jumps out at me is you got a FOMC announcement on Wednesday and a chair conference. These could really move the market if he says they're going to delay the elimination or reduction in easing. If he says they're going forward, the market may sell off. He also has another chance to kill the market on Friday. So by definition, this is a very, very busy news week, highlighted by a 2-day Fed meeting, a conference afterwards, and then a Powell speaking on Friday. Earnings announcements are here. Earnings.whispers.com. It's a great site. And you can see not a big week for earnings. So often I'll have my buy watch in my head and I'll look at this and say, oops, 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 but I don't see a lot of these that are my buy list. InMed has been one of the drug companies that has really been moving. If we look down here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So despite a tease on Yom Kippur Eve, market weakness persisted. You can see that everything fell except for the Russell into quadruple witching on Friday. Healthcare was the best performer on the week. I'm sitting, as I said, in a CANSLIM meeting, listening to very smart investors. The overall sentiment is quite bearish, with some expecting a large sell-off. But then I look at how my portfolio did, the buy list performance. Most CANSLIM lists were positive, so perhaps this is rotation and we're about to go higher. I can take and make either argument. Because of that, I think it's even more than usual an important time to remember Ian's 3 road scenarios. The high road scenario is simple. We bounce from here at the lower end of the channel in the 50, we go out to new highs. Wow, that would be awesome, right? What about the low road? Well, we go down and visit Mr. 200-day simple. So that's 10, 12% more of a pullback. That will not be fun. And the middle road is we just go sideways, which certainly could happen, and then we could turn up or down. So I remain close to neutral on my account with less positions, more cash, puts on my major positions and some contra ETFs as a hedge. So if the market goes down, I probably lose a little bit of money. If the market goes up a lot, I make money. If the market is chopping around, I'll probably be flat to losing. I won't have a big loss because of my hedges, but the problem is when you have hedges, you're paying for insurance, and insurance costs money, so the market would have to move a little bit for me to get away from the cost of my hedges. But I don't keep the hedges on every day, and I will make a decision Monday morning when the market opens, whether they stay or they go. And again, I keep pointing this out. If the market year ended today, this would have to be considered a very, very good year. And when you look at those performances, I'm thrilled that I'm still, about twice over the market, a little bit more than twice over the market. If you look at the S&P at 18%, but it's been a tough time. And I heard some very smart people today talk about 30 or 40% drawdowns during February, March time of this year. But overall, market's been strong. All right, so that is the introductory. If you're new to me, it's all stuff that are updated at the end of Friday's close, so they're timely. And I just do it that way because it's quicker. Now, I often like to go into my trade station And I do sort of my 6 different things I like to look at. Notice the Nasdaq futures have turned positive. The E-minis. So they're in a sell signal to a double sell, a person sell and a Laguerre RSI sell. They're in a weekly sell. That's new, came in last week. And monthly, they're still in a buy. So we got to put a little bit of negative there. The bar is red here, blue, and blue. Red means I should be short or hold. I should not be entering a new position. Blue means I could either do whatever I want. Green means I should be long or holding. I should not be going short. So those are 2 negative things. Now at the bottom of my envelope, we could get a little bit lower, but this tells me to expect a bounce in the next couple of days. Doesn't have to happen, but it usually does. Just another support area that says we could bounce. Come down here, the weekly bongo has gone red. That bothers me because that's my long-term trend line indicator. So we'll have to see what happens with that. The daily's already red. The nice thing about a downtrend, we don't have to worry about being extended, so we can forget about that. So I look at this and I'm moderately bearish, but maybe we're close to an inflection point. If I look at the Dow, we'll see if it's anything different. The Dow looks very similar to me. Again, are we going to continue to ride the channel down, or are we getting close to a bounce zone? The Russell looks different in that we're in the middle. No surprise, we've been going sideways. We're on the sell side, though, but on the weekly and monthly, we're still in a buy. And the Nasdaq, like the Russell, is more around the midline, but unlike the Russell, it's in a sell signal by both the Laguerre and the person. It's red. So I see weakness. I see concerning weakness. And I do think sentiment might be overdoing it, and maybe the market's not as bad as people think. But you have to call what it is, and what it is it's still a weak market. That's only a couple percent off the highs and could quickly recover. If we look at the dollar, the dollar, it is showing some strength. It's in both a Laguerre and a person buy. It's green, meaning you should be long it, not short it. You can see the daily bongo has gone long. The weekly bongo, interestingly, has been green going back off this bottom. The weekly's green, the monthly's green, buy signals. So the dollar looks strong, and hence why I've got a pretty big position in the dollar right now. And it's a cheap position. I mean, options on the dollar are not expensive. The problem is you have to buy a zillion of them to actually benefit if the dollar moves. If I look at the VIX and how we ended the week, you could see that although we have a Laguerre RSI and a person sell signal here, we actually had a person buy signal and a big green bar on Friday. At some point the VIX may spike, and you can see it spikes all the time. But it's hard to be long the VIX, this is the VXX, for any length of time, because you can also see what it's actually been doing over the last year. So the VIX is quiet, complacency. It would not surprise me to see the VIX run up a little bit further, but I'll trade the market I have, and no one really cares what I personally think. Now, I love looking at some of the Sager's views on the futures or the ETFs, and it's just amazing how intraday, how trend line support and resistance play. And if I wanted to be bearish, right, and I'm trying to give you what I think is relatively neutral but concerned feeling on this market. This is a Roy Kelly major cycle high. We've had multiple bearish signals occur at resistance. These 2 lines here are resistance, with multiple sell signals coming in at the Roy Kelly cycle high. Now, we've appeared to have broken through initial support on the E-minis. This is The next level is down here. The Nasdaq still has a ways to go before they come up to support. One would hope that this gets above support quickly and the Nasdaq either goes up before then or bounces. The Dow, on the other hand, failed at resistance. It is now sitting upon support. And if it breaks below these double lines, that will be concerning. And the Russell, which we know is going sideways, is actually looking like it's in a position it might bounce. But with this resistance overhead, how far will it go? And I guess to clarify, the Russell's it doesn't have the major cycle, but it does have a cycle top there. It's interesting if we go back to 2021, which would take me forever on a 5-minute chart to find it or a daily chart to find it. You had this exact formation occur, but the market really broke down below support. Hopefully we don't see that. I don't think we will, but that's just my thoughts the night before. In HGSI, I always open up the designer. I go down to Major Markets Plus, which comes from Ron Brown. And within, I go Market Analysis User Groups and then Major Market Plus. I hit Warehouse View, and you'll open up and you can see there's 39 different groups here. Now, I'm going to look at purely price and volume. It's called the top-down view. Oh, I don't have it's going to be here somewhere. Things might not be where I'm used to because this is not my main computer for doing my videos. Let's see if I can find it here. I know it's here. I just have to find it. Oh, where did I put it? Here it is. We'll use this one. And this is looking at price and volume, and it includes activity for 1 day, 5 days, and 3 weeks. And what drives the raw combo, which is how I rank them, is how it's done for the last 1 day. So I'm a growth stock investor. I already told you growth did well. Well, what do you see? ARC Innovation was #1 on the raw combo. Nasdaq was 2. Genomic Revolution was 3. Russell 2000 was 4. Innovator IBD Fund was 6. So I know that I did okay this week because those are the kind of stocks that I have, CANSLIM and growth stocks. What lagged this week? Transports, utilities, gold, silver, midcaps, Dow, NYSE, S&P 500. So is this rotation into small cap growth? Does the Russell maybe even break out here and take us higher? Who knows? It's too early to say. All I can say is last week growth came alive, and we saw that in multiple different ways of looking. Let's take a look. We'll start with the S&P 500. And my charts are messy, and those people who follow me will learn that they're not that complicated. They just look complicated. But green and blue are good. Red is bad. And I've included a lot of different things that I've learned from very smart people in these charts. So let's start with on the indexes, make it like this. So if we look at the S&P 500, we already know major run up. So what happened in here? What's different here? So we had the weekly bongo, which is my long-term trend on the S&P 500, went negative. We had a mobile breakdown, a David Elliott signal. The PSAR dot has flipped to bearish formation. The chandelier stop, which is this red line, is above, which means it's in a sell signal. We closed below the 50-day moving average. This is the 100. This is the 200. It would make total sense and maybe even expected that we're going to travel down and at least maybe, what did I do? Clear all those off. It makes total sense that we might test either the 100, and I guess my middle road scenario would look something like this. The high road scenario is simple. We cross back above that, go to new highs. And then the low road scenario is that just keeps on going. And believe me, that will hurt because that one there is a meaningful drop. We are a 0.1% below the 50. We're 7.8% above the 200. So we'd have to drop nearly 8%, and 8% of over 4,400, that's like 340 points. That would hurt everybody's portfolio. I think those are the possibilities. I'm hoping to see us recover and get above this 50 quickly. If not, I think that 100 potentially comes into play. And we can see it's not just a daily weakness. Down here is a John Person buy-sell indicator. It was a sell back here. And this is the kahuna, which is just shows you the size of the move. So this is a weekday. I think there's reason to be concerned about this index and the market. If I look at the Dow Jones Industrial, I'm probably not going to say anything else. Same story, except it's been below the 100 or the 50 rather for for about 1, 2, 3, 4, 5, 6, 7, 8 trading days, and now it is trading below the 100. This is worrisome. If we don't bounce soon, we run the risk of coming back. That's only 4.3%, or about 140, 150 points on the Dow. Again, the chandelier stop and the PSAR have shifted to a bearish footing. If I look at the Russell 2000, and we've been calling this a Darvas box. You can see it on the weekly. Nothing is different. Maybe soon we're going to get one of these power of threes where the moving averages are all going to come together and give us a springboard. But really, until something changes, we're trading in a Darvas box. And then lastly, the Nasdaq, which maybe will look different, is different because it is above its chandelier stop. It is above the 50. And, right now, it's the strongest certainly stronger than the Dow and the spiders. So, but to be fair, it is in a person sell. It's had multiple big volume down days. They look like pocket pivots, but Morales and Catcher do not recognize bearish pocket pivots. This here, should have called that out earlier. That maroon thing is called a phoenix, and a phoenix is the HGSI version of a follow-through day to the downside. We've now had 4 of them since the last upside. That's worrisome. Look at the volume. It was quadruple riching. Now, here's another problem. If I look at the Nasdaq, I have up here, I set not a big high, but a nominal new high. I did that while my relative strength was getting worse. So that's a bearish divergence, and that might be something to be concerned about. More to come. So I think I've just shown you some bullish, maybe a little bit bullish, but the bearish argument. Now, the next thing I like to look at is just go down some of the key things that I follow. The IBD 50, my type of investing, one would certainly expect this to roll over before my portfolio gets hammered and before this rally is done. Does it look like it's rolling over? That's a new John Person buy signal. You have a red candle there because it closed below the open. And it was down a teeny bit, I believe, on the day. But that's a John Person buy signal. Here's the chandelier. Here's your PSAR. Volume was good. I think IBD 50 ETF looks interesting here, which is good for my portfolio. The microsectors FANG, you can see here, more sideways than the IBD 50. And this is the traditional FANG, not the extended one that I use, or others might use. If we look at biotech, I mentioned that biotech was one of the best this past week, and it wasn't just Moderna's and the BioNTechs. It was some small bios. And, right now that's kind of in a, not tight, but a moderately tight uptrend, respecting the 17 and the 50. I would be bullish on biotech, and I am. The weekly bond goes green. It's in a squeeze, so you might see an outsized move. That's this yellow here. I'd like to see a John Person buy signal. Here is a real pocket pivot, And I guess you could probably draw a trend line somewhere in here and say, maybe we're about to break above that trend line. So biotech has been stronger. And if I look at semiconductors here, they kind of went sideways on the week. And you can see it here in the weekly, up on the week, but really not a big move. Now, another way of looking at growth is there a money manager who has ETFs that we might follow that are tied to growth and the types of things that we might be buying? And the answer is yes. And it's of course, it's the ARK. So if we look up here, and when my wife knows who Kathy Wood is, it just tells you she's a rock star. I'm not sure I'd want to be a rock star, though, in what she does, although it probably drives money. ARKK, it isn't broken. In fact, it's got a bottoming tail on the weekly. ARKK is not broken, and if I want to be fair, and give equal time for the bullish argument, you got lower highs, yet you now turn positive on the relative strength. That's bullish convergence. Again, that also bodes well for the type of stocks that I trade. Now, other things that might give me a clue to the market direction, I might want to look at the US dollar. Here's a UUP. There's a breakout there. You broke above this chandelier stop. You flipped your PSAR. You had a mobile breakout from a squeeze. You're in a weekly bongo. You're above the moving averages in a John Person buy, pocket pivots, and kahunas. That's bullish looking. That's not good for my portfolio, except for the dollar parts of my portfolio, the UUP. And you can see here the weekly looks okay. If the dollar's strong, I know gold was up on the futures, but things changed a lot. You could see gold has just took a dive here down to the 500-day moving average, which is this brown dash thing. That's interesting how it stopped right there. You can see the weakness on the weekly. If I look at the silver, God, I love this program, how easy it is to go. Approaching its 500-day moving average, certainly falling knife type. And then miners, which, don't look so good either. So the metals did not look good as we went into the end of the week. Again, on the futures, as we saw earlier, you may or may not have noticed earlier. Now, it doesn't look like much now. It's up to 0.14%. This is the gold futures. Let's just look at a 15-minute bar. Yeah, coming right into resistance. All right, so we've now looked at the markets. And again, it's sort of a schizophrenic view. Not paranoid schizophrenic, but schizophrenic, because it feels like the markets are heavy and probably want to go lower. But high growth stock, small caps, high growth stocks, CANSLIM-like stocks, and their ETFs look like they want to go higher. So that tells me, as my title said, maybe the sentiment has gotten too bearish. Now, let's look at index groups. We go to industry groups. Hit 07, hit my warehouse view, and you can see I've got 174. Two-day force will tell me those with upward short-term momentum. I got 38. That's, I believe, higher than last week. Two-day down, I've got 25. So short-term, I'm doing better to the upside than the downside. How does that fit with the major indexes? Interesting, isn't it? Now, when you look at the short-term momentum, it's like an HGSI portfolio list: semiconductors, communication, exploration, REITs, semis, midstreams, e-commerce, infrastructure, diversified banks, IT. So these are a lot of the things that I live in. Friday was a tough day, but notice on the week, many of these were up on the week, despite the fact on the two-day force they were down. If we look at a longer-term down, 5-day down, you can see it's 53 versus a 5-day up, which is 38. So this tells me longer term, the market's probably weaker. In short term, I'm seeing a little bit, maybe some green shoots of some opportunity. Let's look at the 2-day up, and let's go play with that for now. So you see I've got 38. Make sure I'm ranked by raw combo. And I will right-click on the first one, then left-click, change to index group. And you can see, although biotech is strong, only one was stronger than the index. and that was Corvus Pharma. I know nothing about. They had a big move on Friday, Bible gap up. Do your homework. It's a cheap stock. Now, I don't know if Cassava is partners with Biogen or if they've got their own Alzheimer drugs, but this one has sold off as Biogen sort of had failure to launch their drug for Alzheimer's because of controversy. It had a nice move on Friday. Again, it's below the 200, not my favorite place to go fishing, but one I might watch. This is also below. This is CRISPR. I like this one's story. It's kind of basing. And remember my little thing? I've got sort of a downtrend here, but I've got support underneath. And what do I have here? I got a major bullish convergence of relative strength versus price. CRISPR is on my watch list for both those reasons. Amgen, too far down. Fate. Now here's another one that might be interesting. It doesn't have the bullish convergence on the relative strength, but it has a new person buy signal, mobile breakout from a squeeze, a pocket pivot, and a kahuna. Repligen. Why do I like this pattern? Why do I look for mobile breakouts from a squeeze, kahunas, and John Person signals? Hold on 1 second, I need to go answer that. Yeah, that was the hotel asking when I'm leaving, because only I, who does this for free, would actually go and pay extra money to stay in my hotel room so I could do the video. But I like doing these, and I learned too. Repligen's had a big move, but just if you look historically, when you get lineups of mobile breakouts from a squeeze, pocket pivots, kahunas, this is when the stocks take off. So I don't use them to tell me when to buy or not. That's all price action, price and volume, price and volume, price and volume. But I do use it to help me draw my eyes to it and to find it. And, I used a lot of MarketSmith this week. I use it all the time. It's another great charting platform. And, I might be using it even more in some of these calls just because of how it does volume and some of the fundamentals. So Repligen, it's been a leader. It's a leader right now. I probably want to be buying it here. Twist, Iovance, I think this is one of the ones that we looked at. Look at this, weekly bongo, mobile breakout from a squeeze, took out its 50 and its 17, a PSAR switch, and its chandelier stop, a person buy, good volume, pocket pivot, and kahuna. This is what I like to buy when the signals line up and they get interesting. So coming out of a base, now I'm going to open up MarketSmith, and this is going to go much longer than I want it to. Hopefully I'll be able to upload it on the slow internet we have. But let's open up MarketSmith and just let me show you what I was talking about. Charts. Good. Close this down. Make that big. These are clean charts, and yes, my charts are messy. My wife would say I'm messy. Somebody I listen to says the markets are messy. So I guess messy's in vogue. But here's Iovance. And the reason why I wanted to do this was because I learned a lot from the MarketSmith chart. And if somebody knows a way that I could easily import 50 or 100 stocks without doing it one at a time, please do me a favor and let me know. But basically, here we have a base. It's kind of a beat up stock. So that's one thing to keep in mind. Its relative strength sucks. It's only 11. Okay. But it's starting to have volume coming in. In a weak tape, it closed at its high. And I think this was one of the ones I showed you early. So I see stuff on MarketSmith that I don't see very easy because of my cluttered charts. So the negative here is it's got low relative strength and it sucks. And I've actually built that into the box here. It's not the same numbers, but it's a similar look at relative strength here at 30. So we're not talking about lower left, upper right all-stars, although this one looks pretty good. This one, Bible gap ups work, and here was a Bible gap up, a mobile breakout from a squeeze, taking out the moving averages, a new John Person buy signal, and a kahuna. Too late to buy it now. You had to buy it on the Bible gap up day. I certainly didn't see it until that day. So a lot of stocks here's Surface Oncology is another one that I find interesting. But the problem with these, and let me be very clear of why I wouldn't go out and buy all of them. I'd probably look at CRISPR. And let's go look at that in MarketSmith, CRSP. But look at the mobile breakout from a squeeze, a new weekly bongo, breakout here with a person buying a kahuna. It's everything I like to see. But the thing about these biotech plays is most of them have no earnings. They're research stories, no revenue unless somebody bought or licensed something. So probably high risk. And again, going back to MarketSmith, let's pipe in CRSP. This is the kind of stock, and again, its relative strength rating is poor. Look at the volume that came in here. And I'm going to look for more volume. This is a guy I believe will be a long-term story in oncology, in cancer care, and in hereditary diseases. The other one that I talked about, what is it? Oh, come on, don't be. It was Surface, SURF. And you can see, again, a very bullish bar on a very bad day, little bit of continuation after hours, massive volume. So I think it might be good to nibble on some biotech, but keep in mind you're nibbling on some things that have been beaten up. Because I'm under non-disclosure with half these companies because they are my customers, I typically, when I want to be long biotech, will buy LABU, and I'm long biotech right now. All right, the next I'll go left click, then right click, and then left click on back. Renewable energy, change index group. We'll look at a couple of these. I'm not going to go through 10 today because I don't have time, and I got to upload this. And I'm really doing this part here to teach you how I use the program, how I think. I'll show you my buy watch list and maybe call out some things. But I'm not planning on having 30 things as buy orders on Monday. I want to see what the market's going to do because to me, it's indecision. Plug Power, top ranked here by short-term momentum. So you got your mobile breakout from a squeeze, a person, buy signal, pocket pivot, and kahuna. So maybe this is going to be interesting. Now, if I'm going to go into MarketSmith very quickly, at home I got multiple monitors. I'm in a hotel room, so I don't. The volume is picked up. It was a good volume day, closed near the high. I don't think it looks as good as being number one should be in its group, but it's probably as much a meme play as anything else. But if the infrastructure deal gets passed, all these green energies will probably benefit. Solar Edge, great fundamentals, and it does nothing. It's been going sideways for months. Look at the earnings per share growth coming in, the growth of revenue. We'll see if this gets a bump again with the infrastructure bills. Fuel cell and alternative. Again, I don't buy something that is so far down in the pattern. This is below multiple moving averages. Global breakup from a squeeze, person buy, kahuna. I like all those, but it's in a downtrend, so I don't usually chase those. Sunrun, similar. End phase, it's at least, I don't know if it's a power of three, but you got a bunch of moving averages coming together. Across above that might be interesting. Doesn't have the same fundies as the others. And just for those people that think, and it used to be me, that earnings per share growth meant the stock had to go up. Look at DQ, which is sold off since February. And then let's look at its earnings per share growth to 31%, 134,000, 1,200. So despite great earnings, the stock is sold off. I actually entered a position back here when I had a mobile breakout person buy signal, and I thought we had some bullish convergence. So we'll see if this one works. Right click back, you can see a list of the other groups where you might want to go searching. And I just go through, I look at the chart patterns, I try and identify things that work for me. I'm going to cut that short today because, frankly, I got a plane to go catch. And I still have to upload this in a slow internet. So I'm not telling you that I love my buy watch list. My buy watch list is just that. It's a watch list. So I'm going to review my watch list with you very quickly, and then I'm going to say goodbye. But for those that don't know me, I like to buy stocks when they're moving up. So I set buy stops above today's high if I'm interested in the stock. If the market sells off at the morning, it's likely my stock sells off and my buy stop does not get hit. If my buy stop is hit, I immediately put on a sell stop. The sell stop is usually set by the chart pattern. The closer I am to support, the less I'm risking and the more shares I can buy. At some point when the stock moves up, I will take my stop to break even, and I may or may not take some profits. After the stock is up 10, 15%, I will put on some type of a trailing stop and eventually switch it to a chandelier stop and let the stock run. I take my profits early, I move up my stop, and then I'm playing with the bank's money. I prefer uptrends. Now, how do you look at 42 stocks every day? It's simple. I stick them in a market watch. And in this market watch, I have a lot of the signals that I like to use to tell me that something is happening in my stock. So I'm able to manage this by looking at them on a day-to-day. You can see all of them in my buy watch list had a good week this past week. So that might be a problem. But some of them I think have more room to go. Now, if you don't have Thinkorswim, you can do the same thing in TradeStation. And here it's called the radar screen. I call, because of some things I use, Sonar, where I have a list of the stocks, and then I have various indicators that give me a sense of what the market is doing, and it helps me find things. So LKFN has a lot of bullish signals, and I got to make this the same thing. Oh, being on the road is so much fun when I do these. Not. But I can look through, and I just saw this guy here. I don't know anything about it. Why aren't you? Let's see. Well, sometimes I got too much open. But LKFN. And so I'm able to find things that are firing signals and look at them. So this one, it's got some bullish things going on, but there's all kinds of resistance overhead, so I wouldn't even look at it. But I can put my buy watch list into one of these so I can watch them as they go. One day I'll have to review my process. So let's just quickly go through these 42 stocks and my thoughts on them. Tesla, I'm not a Teslonian. I had a Tesla. It's in an uptrend. It's one of the leaders. It had a new person buy signal on Monday. Weekly bond goes green. Great earnings per share growth. It's too expensive. At multiple doesn't make sense, but it probably still goes higher. Palantir, this one woke up. I went long on this. I was long in the past. And when I see mobile breakout from a squeeze, a new person buy, and then I see a kahuna come in and some pocket pivots, I feel vindicated that I should have gone long. I am long this. I think this one could go higher. Centene, you're going to see a host of managed care companies. Something is happening. The managed care was one of the top 3 or 4 industry groups, and you could see mobile breakout from a squeeze, a person buy, a pocket pivot into kahuna, and improving relative strength as the stock got cheaper. Again, maybe it's because they're going to control drug prices. Maybe it's because some of the legislation or the congressional rules are not bad for these managed care companies. Centene does a lot of government insurance. Unity Software, this is a lot of people talk about this. I'm certainly not the first one. It's broken out. It's already starting to run. Look for this on a pullback. Asana, like Unity, is a great picture here. It's had a very nice run. This was the day to buy it. Mobile breakout, squeeze. Next morning it had a Bible gap up. It's extended now, so I'm not chasing it, but I'm looking for pullbacks. Digital Turbine, we talked about this today as one of the great stocks of 2020. It has gone sideways forever, and it looks to me like it wants to break out here. And I re-entered this. Again, sideways move. Look at the improvement in relative strength. AutoNation broke out. You can see on the weekly how it's uptrend, sideways, and breakout. Probably not too far gone. I'm going to watch that. Matterport already running, but I wanted to watch this. Again, I look for pullbacks or big volume days, reversal days, etc. Diamondback Energy, this is one of my favorite exploration and productions. Great earnings per share growth. They paid out some dividends and announced some stock buybacks last week, but it's pulled back to support, showing some momentum here. You can see on the weekly as well. Ford Motor, pull back to the 50. And what do we have? A couple of kahunas. We have pocket pivots. We have a person buy, a mobile breakout from a squeeze. We took out the 50 and probably some bullish convergence. United Health looks even better than Centene in that it's taken off from higher base. It's right below its chandelier stop, had a mobile breakout from a squeeze, a new person buy, and a pocket pivot. A break above that chandelier, that would be very attractive to me. These stocks have earnings and are not necessarily overpriced. This is an IPO that's had a big move. I would look to enter it if it clears its chandelier stop. Mobile breakout from a squeeze, a kahuna on Friday. Something that we learned today is when the 200-day moving average starts is when these stocks usually come up. We don't see the 200 yet. It's probably not that far away. Overstock, old name, sideways move. Why do I care? Broke above the 50. Mobile breakout from a squeeze. Person buy, pocket pivots and kahunas. Something to watch. CRISPR, I've already talked about it. Here is a cheap biotech that broke out on Friday. Let me say it's a downtrend. I'm just looking at the new breakout. Clearly, relative strength was getting better as the stock price was falling. Buy at your own risk. Do your research. I don't know anything about this one. Anthem, here's another payer going sideways after a big uptrend. Lots of bullish signals, improving relative strength. I look for this one above the chandelier. It's Anthem. Don't know anything about Rush Street Interactive. It's already run, so it's one I want to watch for pullbacks. Natera, this is a healthcare services company. Sideways move, and it looks like it wants to break out here, a mobile breakout, a new person buy, pocket pivot, and a kahuna. Arena Pharma, they are a potential acquisition candidate. There was some news last week, sort of a broad cup and handle breakout, and then another handle and trying to break out here. Bridge Bio, it's another one of these biotechs that's sort of beat up. It's another genetic disease story. But sideways move, mobile breakout from a squeeze, right below the chandelier, the person buy, pocket pivot, and kahuna. I like to see it get above this area here where the chandelier and the 50 is and not just fall back from there. So I look to break above that. So I'll put a stop there. Upwork looks very interesting here. Don't know much about it. Sideways, uptrend, sideways move, and here it's broken above the 50. So it's the kind of thing that I would be looking for. Fulcrum had a big viable gap up, sideways move, looks like it's ready to go again. Again, don't know anything about it. It's a biotech. I looked here because I look at market cap. You can get to $2 billion or more without a positive clinical trial on a good story. If you get a positive clinical trial, you're going to be at $2 billion to $4 billion. And if your drug gets approved, you're going to probably go to $8 billion or be a takeout candidate. So there must have been some news because they went from 8 to 28. Their market cap just went from 400 to 1.2 billion. I would probably take a look at it and see. I love the chart pattern here. It's got momentum. I suspect it's in the same genetic disease category, and maybe this is why some of them are running. Coherus, this is a biosimilar company, meaning they make generics of biologics. It's the new thing in cancer care because it lowers the cost for patient care. They presented data last week or 2 weeks ago on a new lung cancer immunotherapy drug. It is a branded non-biosimilar. It's very exciting. Viable gap up, mobile breakout from a squeeze. Kahuna, it's in a person buy. Its market cap is teeny, and they've got a product on the market and others to come. This was a darling. It's probably the most successful biosimilar company ever. And had the best launch of all time. They were up as high as $37, $38. This is exciting with their biosimilar, but excuse me, it's a PD-1 drug. Obviously, somebody liked it. This is something to think about. Here's your N in CANSLIM. What's new? It's their new drug for lung cancer. Don't know anything about Enable. It is an IT services IPO. Look how strong it is on the weekly with a clear breakout. This is where it opened up high after it came public, traded down, and we're now pretty much going to take out the prior highs. Mobile breakout from a squeeze, multiple kahunas. That one looks interesting. Again, do your own research. I'm just building my buy watch list. Centurylink is an old name. Haven't liked it in a long time, but I'm kind of looking for that gentle performer with a good dividend. Since AT&T's dividend is going to come down, they have a dividend of 7.7. Certainly not a CANSLIM or a growth stock, but might not be a horrible place to park your money if the marketplace suffers. I would validate that they're actually paying their dividend. It looks like they're paying $1 a year, and $1 on a 13 stock is going to be in your 7% range. They used to have a much higher dividend and they cut it, but maybe they're doing better now. Agrify, this is a company that helps grow. I think it's a pot story. It's indoor growth of agriculture. Big run up on an IPO, pull back to the 50. What do we got? A mobile breakout and a person buy signal sitting on the 50. Good RX, another recent IPO, beginning a nice run. I look for a buy point. I don't see one there. Orogenesis, this is a wound care company. I love uptrend, sideways, and breakouts. Uptrend, sideways, and breakout. Mobile breakout from a squeeze, pocket pivot, and kahuna. Now, it's below its PSAR dot, so I probably set a buy stop just above it, which means it's got to move a little bit before I get into it because it's just been going sideways. I don't want to get trapped in a sideways move. But this one looked interesting to me. Blade Air Mobility, a stock that was beaten down, failed at the 200, just broke above the 200. I'm not buying it. I'm going to put it on a watch list and look at it. Vera Biotech is another, this one treats a lot of viral things, so I don't think there's a COVID story, but there might be. Sideways move. When I see this, I usually run for the hills because it's one of these stocks that gets a high volume run. The volume, this 12 million a share, 11 million a share. It was a meme stock. Sideways move. Bunch of pocket pivots, a kahuna, mobile breakout from a squeeze. It got my attention, and it's on a watch list. Fertilizer play. CF pulled back to the 200, broke out above the 50. Bunch of pocket pivots. There's volume there. Big volume, big earnings per share growth. Let's look at it really quickly in MarketSmith. And I see these really big blue volume lines breaking out in a down tape off of support. Great earnings per share growth this year, $4.37. It has a multiple of 24. If it gets $4, even the multiple drops to 15, it's a $60 stock. I look for this to go out and retest its old highs. This is one that I like. I also have Mosaic already in my portfolio. Multiplex is a MLP. Boring. I don't look for a lot of price appreciation here. I do look at a 9.6% dividend. I make sure they have earnings enough to pay for it. Here's a bottom play, Grifols. I don't know enough to say anything except it showed up on my screen because of a mobile breakout from a squeeze, a new person buy, a pocket pivot, and a kahuna. And oh, by the way, my old favorite thing that I like to see because it's made me money in the past, stock was going sideways and its relative strength was going, oh, come on, Jeffrey, learn how to draw already, up. Bullish convergence and a breakout above the 50. What I don't like about this and why I would be careful, and I'll continue to watch it before I jump to do anything with it, is it's in a downtrend. But is this a bottom bounce? Could be. Carlyle Group, if you want a steady Eddie, it slowed its ascent. pays a 2% dividend, got good earnings per share growth in asset management. Fox Corp, Class B. I don't see any earnings here, which probably tells me the program didn't get them from their data provider because it's had earnings all along. What did I like this for? Pull back to support, multiple kahunas, pocket pivots, person buy, mobile breakout from a squeeze, and broke out above its moving averages. Cirrus Corp, similar story, broke out above its averages, mobile breakout from a squeeze, person signal, and a kahuna. And I'm getting tired. Nomad Foods. Again, this is the pattern I like. I like this pattern for a number of reasons. I'm buying it off of support. I've got multiple momentum signals. I've got my old favorite of bullish convergence here on the relative strength. Stock flat, relative strength high. You're not down in the dumps. This one looks very interesting to me. You're not coming off, you're not bottom fishing. Eastern Bank shares, don't know, this is the only bank that made my list. And again, look at the relative strength as the stock has gone sideways. It's got a person buy signal, mobile breakout. Not my favorite picture, but I want to watch it. Don't know anything about Hancock Jaffe Laboratories, somewhere out in California, medical devices, but it's been going nowhere. It's breaking out and it's moving up consistently. Mobile breakout here. Kahuna, it reminds me of what Tandem looked like before it broke out. And Tandem was an expensive stock. Here, the stock was $136. Pulled all the way down to $6. Now, if I just looked at this part of the curve, it's gone up 50% in 4 months. I find this one interesting. Goes on my watch list. World Wrestling Entertainment, I keep thinking this thing's going to recapture what it lost. Again, bullish convergence. Capstead Mortgage, this one is broken out, pays 8.6% dividend. Here's that other fertilizer play, pull back to support, broke out on Wednesday. Again, bullish convergence when you're going sideways on price and you're going up on relative strength, that's bullish. And you broke out here, a global breakout from a squeeze and a kahuna. And like CF, great earnings per share growth. And that was my buy watch list. So again, this is not a buy list. I am not going to buy all of them. The perfect stock will be sitting on its 50-day moving average for me. So let's see which one. Did Upwork do that? Okay. So I love this pattern. Now I'll go look at it in TradeStation, see if I still like it. And I'm going to look at it in this view here, UPWK. Where is it? It's going to be here somewhere. Right in front of my face, probably. Let's just alphabetize them. Here it is. So it was up 4.4%. So what do I see? I see on a daily chart that it's right above support. I'd rather buy above support than below resistance. It's at a person buy signal coming off of support. On the weekly, it's pulled back hard. It had a buy signal the prior week, and then it's got a weekly high close doji, which is a very attractive signal based upon my trading experience. If I look at some of the Sager's Q tools, it's got a go with flow buy signal off of support. The weekly looks good. This one looks very interesting to me, and therefore I might want to work this up. Now, I might go look at it in MarketSmith and make sure I don't see anything I don't like. And I see a close near the high of the day on a week tape. I see volume coming in above the average, and it's 1, 2, 3, 4, 5, 6, 7. Probably about 35 days before you get a negative volume. So this one looks interesting to me. It's not getting an automatic pattern thing by MarketSmith, so I might be early. So now I would open this thing up here. And so I would look at this stock, and I would say it closed at $49.70. The high of the day was $50.08. And so I might sit here, and this is the last thing, and then I'm going to say goodbye, guys. So I might put a buy stop just above the high of the day. So let's call it $50.10. Okay. So I might put a buy stop right above the high of the day. Now the better question is, I didn't mean to do it that way. The better question is, what am I going to do for a sell stop? So I'd automatically put a buy stop in over here, and I think I said it would be like $50.10. Now I want to look at the lowest bar in 4 days. So here's the low, 47.76, 46.53, 46.79, 46.15. So one way of approaching this would be putting a sell stop at the lowest bar here. This one was 46. That's 1, 2, 3, 4 within this bar. At the low, at 46.10. So I could put a sell stop at 46.10. 46.10 to 50.10 is $4 on a $50 stock. So I'm looking at 8%. That is one approach, and I have no problem with that. Now, I'm only interested in buying this stock because it broke out above the 50. The 50-day moving average is at 47.98. And where's the chandelier stop at? $43.37. So I would probably look at the 50-day moving average here at 47.98, take away 50 cents for in case it wants to play with me, which is 47.48, bring it down to 47.45. I would set my stop here. Sell stop, 47.45. That means I'm risking $2.65 a share. So if I'm willing to risk $5,000 on trade, I could buy 5,000 divided by my risk. So it's probably in the 2,000 shares. So that's how I would do it. So now what I would do is I'll go to my Thinkorswim and I would go into the trade place. I would decide if I'm going to buy stock or options, and then I would use the gear. I probably have to go get it set up here. I would use the gear to set my buy stop and a conditional sell stop. So that's how I trade. I look for a breakout from support. I set my stop right underneath support, or at the worst case, the lowest of the last 4 bars. And then I would set my first target would probably be equal to 1 times my risk here, especially since I think the market is challenging. So I would look to take off half. And if I'm buying it at 50.10 and I'm risking 265, so sometime around 52.75, I will look to take off half of my position, at which point I'm going to raise my stop up to break even, and then I'm going to trail it with a trailing stop and see if I can't milk this for something. That's just how I approach these. I just wanted to show you that because I had mentioned a few of these things to people this weekend. Have a great week. Again, I think the market is not as bearish as the news makes it to be. But that's just my thoughts, and it's it's Sunday night, 9:30. The futures are relatively, they've turned negative. The Dow's down 150, the Nasdaq's down 25, the Russell's down 10. Gold's actually up a bit, but we know this thing's going to be all over the place before it goes. If the market is weak, do you think this thing's going to trade up and hit my buy stop? Probably not. But if it does, that tells me something as well. So that's how I look at the market. That's how I look at stocks. You all have a great day, great evening, and I'll talk to you all next week. Thanks, everybody. Comments to hgsidoc@gmail.com. Goodbye.